Construction stagnation. European contractors face a daunting 2025. Facing a year of zero growth, European contractors find themselves in a challenging predicament. The EU construction sector's prospects have dimmed, with little hope for a significant turnaround soon. Let's dive into the details and uncover the nuances behind this stagnation. Stalled growth. The EU construction sector's bleak forecast. Our latest analysis paints a grim picture for the EU construction sector, predicting zero growth for 2025. This forecast marks a slight downward revision from our earlier projections. https://thinking.com articles returning but low growth expected in the EU construction sector. While there are some faint glimmers of positivity, they're not enough to ignite substantial optimism among contractors, who remain cautiously pessimistic. Confidence crisis. The EU construction sector's struggle continues. The first half of 2025 saw no significant growth in production levels for the EU construction sector. For Austria and Poland, our forecasts have taken a hit, with Poland experiencing a double whammy of declining construction volumes after a steep drop in 2024. Infrastructure doldrums. Delays and disputes hamper progress. Poland's infrastructure activity has been sluggish thanks to delays in implementing the Recovery and Resilience Fund. The fund was frozen for 2 years amid a rule of law dispute with Brussels. However, a potential silver lining emerges as a forecasted dip in interest rates might spur a recovery in Poland's new residential sector by 2026. Netherlands and Belgium. Building permits and legislative tweaks. In the Netherlands, we've adjusted our forecast downwards, as the number of building permits, which surged in 2024, has dwindled this year. Meanwhile, Belgium's forecast remains unchanged, despite a drop in building permits, thanks to a recent legislative change that could buoy the sector. A reduced VAT rate of 6% now applies to renovation and the demolition and reconstruction of homes, offering a much-needed counterbalance. Spain shines, a beacon of hope amidst construction woes. Amid the gloom, Spain stands out as a bright spot within the European Union. The country's construction sector has thrived, bolstered by robust GDP growth. Construction confidence soared to its highest level since 2006, a testament to the sector's resilience. Building permits hitting rock bottom, but is there light at the end of the tunnel? The issuance of building permits for new houses in the EU has hit rock bottom, with slight signs of improvement. However, the number of permits granted remains abysmally low compared to 2021, particularly in Germany and Austria, where issuance has plummeted by over 40%. The German government's Housing Construction Turbo initiative aims to expedite the planning and authorization of new projects in sought-after residential areas. But it may take time for these measures to bear fruit. Spain's housing market, a tale of two cities. In stark contrast, Spain's housing market is heating up, with house prices skyrocketing. This surge has created a compelling business case for new developments, leading to a substantial uptick in building permits in recent years. Housing shortages persist, supply struggles across Europe. Housing scarcity continues to plague most European countries, spurring governments to intensify efforts to boost the supply of new homes. However, these endeavours often fall short due to structural hurdles like cumbersome approval processes and scarce available land, coupled with cyclical headwinds such as rising interest rates and ballooning construction costs. New housing completions. Spain leads the charge. Most countries have witnessed a decline in new housing completions due to fewer building permits being issued. France and Austria have borne the brunt of these reductions. Interestingly, French prices for existing homes have dropped by around 5% compared to 2 years ago, presenting a challenge for new developments amidst soaring building material costs. Spain, once again, bucks the trend with a growth in newly constructed houses, albeit contributing modestly to the country's overall housing stock. Poland's high construction activity. A mixed blessing. Poland boasts the highest percentage of new residences added to its housing stock in 2024, 1.5%. Despite this, Poland still grapples with a high rate of overcrowded households. The country's households have the fewest rooms per person compared to 10 other major EU nations, highlighting ongoing housing density issues. Nonetheless, Poland's heightened construction activity has helped reduce its overcrowding rate over the past decade, unlike many other EU countries where it has worsened. Price increases, a faint possibility. In July 2025, few contractors are contemplating raising their sales prices. Strong competition persists due to the production downturn in 2024 and the anticipated zero growth in 2025. The proportion of EU contractors planning to hike sales prices actually fell from 8% in January to 3% in July. French sales prices, a downward trend. In France, a majority of building firms are mulling over lowering sales prices due to tepid demand. Conversely, hefty price hikes are anticipated in the Netherlands, Poland, and Turkey. Turkey's inflation woes continue, driving up construction costs, while the Netherlands' recovering demand enables builders to push for price increases. Infrastructure. Germany's growth, France and Spain's decline. Germany has emerged as a leader in infrastructure growth, while France and Spain have experienced declines. Investments in Germany have soared by over 55% between 2010 and 2024, fueled by the need to address infrastructure deficiencies, particularly in roads and digital infrastructure. Germany's ambitious €500 billion infrastructure and climate investment plan, unveiled last year, promises further expansion in the coming years. NATO's infrastructure spending, a closer look. In June, NATO countries pledged to hike their defense budgets by 3.5% of GDP annually and allocate an additional 1.5% to broader resilience efforts, including infrastructure and cyber defense. Member states are tasked with meeting these targets by 2035. However, most European NATO countries already exceed the 1.5% of GDP threshold for infrastructure spending. While not all infrastructure expenditure is defense-related, the broad definition of resilience allows for creative interpretation, potentially leading to infrawashing. Italy, for instance, intends to categorize its proposed bridge to Sicily. https://www.ft.com/content0A3412D5 2B5 4999 94A 5 22 E83 745 6F. Share type non-gift as strategic military infrastructure under this framework.